I just want to be able to invest my money. And what everybody is looking for is freedom. They all want freedom. There is no such thing as a passive business. So if you want a passive business acquisition, it's not for you. It's not possible. It's a fairy tale. There's some gurus that preach that, but there's no such thing as a passive business unless you are an investor in a business and you let the operator like myself or my team do the work. Then it becomes completely passive. But you cannot be an owner operator and expect to be in a passive business. It's just impossible. At least not until you get to a certain level of businesses under your belt. And it's not passive, but you have a lot more freedom than you would as if you own just one business.
Let's impact some men today. I think we're gonna do a great job.
What's going on, guys? Welcome to another episode of the Modern Man Podcast, where we are here to connect men in pursuit of their potential. I encourage you to join us as we embrace discomfort, cultivate community, and put wind in each other's sails. Now, before we jump into the episode and get the amazing value from our guest, I first want to make sure that you hit that like button, hit that subscribe button, and share this with someone else that you can get value from it as well. Now, to the fellas that are listening and watching, I encourage you to check out the Noble Knights Men's Group, where you can find the support, accountability, and the mentorship you need to achieve your goals. And I'll also say the challenges that you need to achieve your goals. Join us and become a part of a community of like-minded men on a mission to improve themselves and increase their capacity for life. And I'm excited because we're going to get some wind in our sails today from my guest, who is joining us out of Louisiana. He is a serial entrepreneur and business acquisition strategist who has built a multi-state portfolio of cash-flowing companies by acquiring existing businesses and transforming them into scalable assets. You guys will not want to miss the value from my guest today, Joshua Wilson, who is taking the time. Josh, thanks so much for joining us, man.
Yes, man. Happy to be here. This is I'm sitting outside today enjoying this beautiful weather. So yeah, it's great.
I love it. I love it. And before we jump into the conversation of you and I first want you and the audience to get acquainted. And the question I typically would ask is, who are you? What do you do? How'd you get here? But as I've had more and more guests like yourself who don't need as much of an introduction, I go a little different. How do you introduce yourself to a room of people who don't know who you are, or what you do, Josh?
I just tell them I'm a recovering real estate addict that turned into a mergers and acquisitions entrepreneur. And
Yeah.
that's essentially what I did, man. I was in real estate for a very, very long time and realized that I was equity rich and cash poor. And then I moved into mergers and acquisitions, man. And it's been a game changer. It's absolutely changed my life. And I wouldn't have had I known, early on when I first started, instead of acquiring businesses and instead of starting them, I would have done it way differently. But it is what it is. It's just life's way of teaching you a lesson, and I'm enjoying the ride. So
Absolutely enjoying the ride, and
yeah,
I'll tell you, as a fellow gray pepper, salt and pepper bearded
yep.
guy, I know, the entrepreneurship journey could definitely add a few years to you. But I want to talk about that transition because I already wrote it down. Here we are, like just what 2-3 minutes into the podcast. I'm already taking notes. Equity rich, cash poor. What does that mean?
Well, it means that I had all this net worth or all this money on paper, but when it came time to actually pay my mortgage, I couldn't pay that with a balance sheet. I needed actual cash, cash flow to actually go and pay those bills. So that's why I say equity rich and cash poor. I had all this equity, but I couldn't tap into it. So the only way for me to tap into it was number one, sell, or number two, go to the bank and borrow against it even more. And I couldn't do that at the time. So that's when I tapped out, man. I tapped out and I decided I'm going to sell my portfolio, and I reinvested those funds into cash flowing businesses. And now, those days are behind me. So,
Yeah.
yeah.
Let's talk about that transition because I speak to a lot of different entrepreneurs. I know I've even said before, risk is a budget line, but when you talk about selling your portfolio, acquiring cash flowing business, going from a W-2 employee to acquiring an agency, a multi-million-dollar agency, walk us through that process and mindset, right? Because I could imagine some guys might be listening. They have a stacked 401k, a pretty cushy job, but just like you, cost of living's gone up and they're looking at their paycheck and their bank account and the checking comes down to like $82 at the end of the month. It doesn't make sense. Now, I'm
Right.
quick to say, listen, if you have $82 in your bank account at the end of the month and your bills are paid, the family's fed and the roof over your head and everything, you're not broke. You're just a man that took care of business, but it's a very demoralizing spot to be in when you see
Right.
how close that margin is. So talk a little bit to that
Yeah.
guy who's maybe contemplating cashing out.
I used to be that. I used to be that guy. I used to live that life, and I've been there before, so I can relate. And it's a tough place to be, man. You have to. One thing, a few rules there. Number one, diversification, right? So I was all in on real estate, and that's part of the reason why I pivoted into M&A is because it was during COVID, and I didn't know if the tenants were going to pay rent. So I made a switch and I said, you know what, I'm going to go acquire another business so I have additional income coming in. God forbid, we didn't get rent in. Luckily enough, we did get rent in. Those days were behind us, but that taught me a lesson in diversification. And so, I was able to diversify and I had another business, bought that first business in Orlando, Florida, $350,000. At the time, I had no idea you could do seller financing at business acquisition. So I did a seller financing deal, $175,000 down, $175,000 finance. That business today pays me well over almost $700,000 a year in cash flow after debt. So,
Let's go.
and in year one, it wasn't that pretty. But I systematized it and I took a chance on myself and I took a risk. And, I talk with a lot of folks that are interested in investing with us. And that's their biggest hang up, man, is that the fear, what if it goes wrong? What if it doesn't work out? All these what ifs, all these mental roadblocks. And if I would have listened to myself and listened to all the mental roadblocks that I had in my head about why it wouldn't work, I probably would have never switched. I would have never pivoted and I'd been miserable and still, looking at my balance sheet, trying to figure out how I'm going to pay my mortgage next month, So I think that's the biggest,
Yeah.
takeaway is that you are going to talk yourself out of anything you have never done before. And that is just the way the mind works. It keeps you away from taking risk. And the minute you take that risk and the minute you gather and gain that experience, the minute the confidence level immediately goes up. And so I tell people, look, take a calculated risk. You don't have to be stupid about it and just swing for the fences. Do your due diligence, take a calculated risk. If it makes sense, do it. There's no reason. I mean, you're not going to lose everything. Worst case scenario, you file bankruptcy and you start all over and you do it again. You're not going to lose your shelter. You're not going to lose water. You're still able to breathe. It's not the end of the world. And it's just these scenarios that we make up in our head, man, that like we feel like we're going to be on the streets and like we don't know how to work anymore. Like you can go get a job. It's not like, you know what I mean? So, but if you don't take the risk, you will never know what's on the other side. And I'm very happy I did. Very happy I took that risk because that has led me down the path now to 7 companies, multi 7 figures now in cash flow. And I would have never known had I just stayed in my box.
Man, there's a few questions there, but still leaning into the whole risk aspect, and I'm gonna have to go over there and check on you. It looks like you're cheating on my paper here, looking at my notes, because you know what the next question is. But um, how did?
Let me go ahead.
Go ahead. Go ahead.
Go
No,
ahead.
no.
I was just going to tell you that when it comes to risk, I'm not saying that I have never taken a risk and it's paid off and it didn't pay off. I took a risk in Miami, South Florida, and I lost $1 million. But that being said, that was also the biggest lesson that I've ever had when it came to mergers and acquisitions. And it led me to the best deal that I've ever done. So
Mm.
I think I think the universe works in very strange ways. And whether it's God, universe, whatever you believe in, I think things happen for a reason. And that deal that I went through, and I bought that deal in Miami. I lost $1 million, led me to an even bigger seven-figure deal in Boston that now has been one of the best acquisitions I've ever made. So just because sometimes it doesn't work out, there's a greater plan. There's something else brewing down the corner, and just hang tight and hold on.
I love it, man. Ladies and gentlemen, here's your proof. Joshua Wilson lost $1 million. He's still standing, smiling to tell the story. So you will be okay, and you can make it through. I was gonna ask kind of a two-part question. In how did the idea or the thought process of business acquisition find you? Sounds like you were already in real estate, so that entrepreneurial approach, the overall leveraging resources for income versus time for income, right? It seems as though you were already in that mindset of investing and leveraging your money and letting it work for you. How did the acquisition piece find you, whether it was a friend, a book, or just the realm that you're in? And then, as you mentioned with the risk and whatnot, how did you talk yourself out of it, or how did you overcome that hurdle of that self talk?
First off, I gotta say, man, Ted, I love you, man. Like I just love talking to you. This is like such an
Salute, dog.
empowering conversation. So this is a great little great podcast you got here, man. But look,
Appreciate it.
so what was your question? I got sidetracked there.
Hey, no worries. I'm gonna go ahead and clip that last bit and make it an ad because you just gave me the best compliment. So I appreciate it. But it was how the thought process of acquisition found you. I imagine you were
Yes.
already in that entrepreneurial mindset, but for some people, they don't know what they don't know. So how did
Yeah.
business acquisition find you? And then how did you finally get over that mental game and get over the
Absolutely.
hump of that negative self-talk?
Yeah, I was I was already an entrepreneur. I've been an entrepreneur since I was a kid. I'll give you a funny story. Have you ever been on a cruise?
Nah, not personally.
No. Okay. Well, if you go on a cruise, they give you these like little hotel key cards. Well, that is like your charge card to like actually go around the cruise ship. Well, I was like 7 years old. My grandparents on a cruise, and the kids that I was with, they didn't have access to key cards. All they had was cash that their parents gave them, so they couldn't go buy anything because everything was cashless. So they had these key cards, and I'd go around and I'd buy my friends that were with me candy, and they would pay me in cash. So every time I do a transaction for them, they'd give me the amount of money, and they'd add like $1 or $2 to it as like my transaction fee to like thanking me for being able to provide them the candy and the little souvenirs they wanted to buy. At the end of the cruise, we get this big manifest, this huge gigantic bill, and my grandfather at the time was like, "Holy crap, Josh! You spent like $500. What did you buy?" And I said, "Hold on, Papa." And I reached into my pocket and I grabbed this wad of cash, and I gave him the wad of cash, and it was like $600 or something. It was well more than what the bill was. And he goes, "How did you get 600? The bill is 500. How did that happen?" And I said, "Well, they were paying me additional money every time I would use the card, so that they were paying me to as like a thank you to use the card." He goes, "Holy cow, son!" He goes, "You just had your first lesson in entrepreneurship." And so that was it. Ever since then, man, I was 7 years old, and like I had the bug ever since then. So, then I started. I had a DJ company, and that was my first six-figure exit. I had a DJ company, and I sold that company. I think I was like 14, and then I sold it when I was like 17, and sold it to my employee and his dad. Blew through that money so fast, I didn't know what the hell I was doing. Blew through that money, but
Gone.
that was like my first, like, yeah, oh god, man, I don't even know what I bought. I don't even remember. It was like 100 grand, just like poof, gone. And then then I kind of started dabbling and getting a little bit more serious, and I started a property management company, and started that company, and that was a grind, man. I actually still have that company till this day, but those early years were a grind of doing a startup. And uh and then then I got into real estate really heavily, and then realized that was a grind too. And but I built up a very nice nest egg and net worth by doing that. And then I realized, I'm like, there's got to be another way. It's got to be a better way. And then I realized I got into M&A, and I had a mentor at the time by the name of Kyle Mallion. Great guy, he's a great friend of mine. and he exposed me into the M&A world. And he was like, Josh, if I could show you how to take that $150,000, and instead of going to buy a piece of real estate that's going to give you $1,000 a month, he's like, what if I could show you to, put that $150,000 and we can get you 150 to 200,000 a year in cash flow. Would that interest you? I was like, hell yeah, man, let's roll. That's what I did. I took a chance, and that's when I went down to Orlando, bought my first company, and the rest is history. As far as like the fear, back then, I didn't have a whole lot of fear, only because I kind of felt like my back was up against the wall a little bit, because when I bought that first company, it was during COVID, and I didn't have fear. I was more of like, I needed to take a risk. I needed to get out of my box. What I was doing was good, but it wasn't like, it wasn't fulfilling. It wasn't providing me what I needed. So I had to take a chance. And so I basically eliminated those mental roadblocks. And then when I lost the money, when I lost $1 million a year or two later, on that second deal, that was tough. That was probably one of the toughest times of my entire life. I thought I was over. I thought like I didn't know what I was doing, just all these mental games, right? And then I remember, I was talking to my mentor at the time. I had a mindset coach at the time, and he said, Josh, you need to start telling the universe what it is that you want. He said, stop holding back. Stop, trying to, just keep it all to yourself. Start telling the universe what you want, what you need, and watch. It will show up, but you have to be ready to receive it when it shows up. And so here is a great story for you. So everybody I talked to at the time, I was like, man, I need another company. And, I just lost money on this company, right? But I need another company because I was bleeding like $30,000-$40,000 a month in attorney bills, trying to sue the guy, for the $1 million loss, et cetera. So I was bleeding cash. And then on top of that, the company wasn't making any money. It was losing money every day. So I was supporting the company, paying attorney bills. I needed like $30,000, $40,000, $50,000 a month of cash flow. Sure enough, everybody I talked to, one day, boom, phone call. Guy calls me. He says, hey, man, I got a deal for you. And he's like, but you passed on this deal like a year ago. When you first got into this, you said, no, I'm not interested. I said, okay. He said, give it to me anyway, man. I was like, I have no other option. So he showed me the deal. I was like, let's do it. So he's like, the guy wants $150,000 down, but you got to assume his $1 million SBA loan. And I'm like, bring it on. Let's go. I went through the financials. Everything checked out. He was just sucking money out of the company. So I knew at the time I just sold some real estate. So I had like 250 grand. So I put that into the checking account as seed money. I paid him 150, and then I assumed his SBA. I had $0 left in my bank account. I was down to broke, and I had zero left. This was my last chance. I said, either I'm gonna die out bleeding, or I'm just gonna go out swinging. That's what I did. I went swinging, and I ended up buying that deal. And when I bought, and then we turned it around, like there was no issue. There was no issue with the company. It was just the other gentleman was in a very similar situation that I was, where he was using all the cash and not allowing the company to actually flourish. He was using all the cash and dumping into his failing real estate company that he had. So I didn't have a failing real estate company. I just had a bad business that I bought. So I had other companies that were working. I just needed a little extra oomph, just to 20,000, 30,000, just to get me over the hump. And I know that sounds crazy, right? When you think of these numbers, but it is what it is. So I ended up buying the deal, ended up turning out to be a great deal because I left the money in the account and I was just able to take out a little bit each month, just enough to keep me going, or what I needed to pay my bills. And I met the guy in Boston when we went to go to Bank of America, and he looked at me for the first time, and I walked up to him. He shook my hand. He said, Josh, you are an angel. And I'm like, what do you mean I'm an angel? He goes, you're an angel, man. He was like, you saved me from losing my house. And I turned right back around to him, and I told him, I said, man, you are an angel. I was like, you saved me from losing my house. And this is how I say the universe brings two people together. We don't know why, but it sure as well, I needed it just as bad as he did. And we both came together, man. And now today, I lost that $1 million, right? And I was thinking that was going to be like my savior. That was the first deal that I was going to buy. That was going to be a 7-figure deal. Well, sure enough, God's got different plans. And so he's like, hold my beer, watch this. So now I didn't buy that deal, and I thought I was going to make $1 million a year. Then I buy the next deal, and I'm making well over that on the second deal. I mean, on the third deal. So um, it's just, life's got a funny way of telling you to just hang tight for a minute, and we're going to teach you a lesson about due diligence, and then you're going to learn that, and you're going to make sure you apply it in the next one. So, but I will say this though, I do due diligence, but I will also say that there's something about when your back's against the wall and you have no other options about the way you're able to navigate, the way you're able uh, to think, and sometimes you need that little extra pressure to get you over the top. You know what I mean?
Hmm. Absolutely.
So
Well, it's
long-winded answer there, but that was my experience.
If iron sharpens iron, so does one man sharpen another. But if you're a man and you're alone or listening to this, then who sharpens you? What's going on, guys? Ted Phaeton here, host of the Modern Man Podcast, also founder of the Noble Knights Mastermind Group. And I'm just out here encouraging you to find your circle. Maybe you're on a personal growth journey and nobody around you understands the new mentality that you're possessing. That's okay. You can find an online community that will pour into you, will navigate your goals and navigate your obstacles, share their experiences, resources, and more. Join the Noble Knights Mastermind Group and try us out for free to tap into a community of men helping each other scale up and reach their goals.
check out themodernmanpodcast.com. No, I love it because I do feel as though, they say there's the fight, flight, fawn, or freeze. And oftentimes when you can't flight and you find yourself in a corner, um, what are you going to do? And
Right.
that's when you make a desperate throw, a Hail Mary, or the haymaker, or fighter's chance. As long as the fight's still going, you have that fighter's chance for that knockout punch. And you stayed in the fight. You didn't lay down after losing $1 million. You continue to throw another punch, and that happened to be the knockout you were looking for. And I love you mentioned the lesson of due diligence, because when it comes to due diligence, it's something that a lot of people might not be too familiar with in terms of the proper due diligence, making sure the deal is right. They don't know what to look for. They don't know what not to look for, which is also part of the fear aspect. But this is
Yep.
study. There's been studies done that show, acquiring businesses can be beneficial. Actually, a study published in the Journal of Business Strategy found that strategic acquisitions can lead to significant improvements in company performance, particularly when the acquiring firm implements effective integration and operation strategies. So I would love to talk about what you look for in due diligence, and if you see a company that might be, like you mentioned, the one person, his company's bleeding money. What are the fixes you identify that you could buy the business and say, oh, I can clean this up and turn it profitable?
Yeah, so I'm not looking to do, I'm not here to buy failing companies. I need to see some type of growth. We're looking for larger. Now I look for larger companies. So I'm looking for 10 plus employees, some management in place. Um, you want to make sure they have clean books, not sloppy books. Those are things that prevent you from getting additional debt to acquire that company, like an SBA loan. And then also too, you don't want to you don't want to buy a falling knife. When I bought my first company, it could have been misconstrued as I was buying a falling knife. I didn't know what I was really doing, but I was able to turn it around and get it going again. But now I'm looking for growth. I was just in Nashville the other week looking at another company, and the books were great for 2024, and they presented the Q1 2025 financials to me, and it was steadily going down. And so I had to politely tell the broker that unfortunately I had to decline the decline the offer, because that he needs to turn it around. I'm not coming in here to turn it around. I'm not going to pay you a premium or um, pay you a multiple for a business like that. So okay, I'm good. So yeah, so it just all of a sudden had a tickle in my throat. So yeah, so those are the things we look for. We want to make sure that we got good books and good ownership. I'm not looking to buy rehabs anymore.
Yeah. and staying away from that would be helpful. What would you say to somebody? Now we're getting into some of the nitty gritty in terms of the acquisition space, and I'm looking to convert a few of our listeners to potential partners for you or potential acquisitions on their own, right? But what would you say are the type of businesses that one should look towards, right? Are they recession proof businesses, restaurants? I know those could be high volatility and maybe not good foundations. So what areas, industries, or sectors do you specifically look towards?
Yeah, I don't do restaurants, just too low margins. I've done it before. It wasn't successful. So um, just it's not my game. Laundromat, same thing. Car washes, same thing. I don't buy those. Just maintenance hogs. Um, I would say reoccurring revenue models, subscription models, service-based businesses, and niche down as much as you can.
Mm, I like that. Niche down.
So sorry, one second.
Yeah. Y'all pray for Josh. He's going through it.
Man, I don't know. All of a sudden, I just got this random, just tickle won't go away. But anyway, so yeah,
Allergy
so
season,
I
man.
would niche. Yeah, I think that's what it is. I would niche down as much as you can. Even as far as like for us, we do the transportation sector, like non-emergency medical transportation, and that's a very very specific niche. We do special needs school transportation. Again, very very specific niche. I would make sure that you're looking at companies that are very niche down, but also companies that are needed, not wants. I do buy like anti-aging clinics. I have those as well, med spas. Um,
Yeah.
but we're focused more on the anti-aging side than anything, and that's because it's more health oriented, right? We do HRT and TRT, and those are things that people not necessarily want, but also sometimes they need them in order to be able to function, for the rest of their life. So, healthcare is huge. Again, that's the reason why we're in non-emergency medical transportation, and that's the reason why I bought that company was because during COVID, I'm like, what is still operating? What is still going on? People still need to go in and out of the hospital, like regardless of whatever's going on. In a recession environment, if you break your leg, doesn't matter, right? If you got to go to the hospital to get your leg fixed. So that's kind of why, we got into those spaces. Urgent clinics, urgent care clinics, I really like those. I just like healthcare in general because I just feel like those are necessities and not so much as a want. And you need to get those things done regardless of where the economic environment is.
Yeah, absolutely. And I know I could already hear all the pens and I could smell the lead of the pencils for all the guys taking notes here in terms of niching down in certain industries to look for. What would the time horizon be if let's say I call you today and I'm like, hey man, you know, I have some cash, I have some liquidity, I'm ready to look for some deals, and you might be looking around. I'm curious as to what the time horizon would be from I'm committed, I'm ready. We find a deal, we go through the process, sign the paperwork, transfer the money, and you're operational.
Yeah. So the great thing about acquiring businesses versus like a startup is that from day one, when you invest, you are immediately getting cash flow from day one. So it's not like a startup where you're like, okay, we're going to start up. We need some seed money. We need to, get going, and it's going to take us, um, it's going to take us 30, 40, 60 days to get going. No, man, this is like you come on board and like the money's already flowing, and that's the advantage. So like we have investors now. We always have deals. Like we're always getting deals in the pipeline. So we have investors right now that when they invest on day one, like they invested at the beginning of quarter 1, which is January of this year. We just get ready to send out our quarterly distributions this month for Q1, and they've been accumulating cash flow from the day they put their money in. So, and that's the other thing too. We're very, very selective in who invests with us because we want to make sure that we're aligned. as well. And so we have very few investors on our deals. Usually we typically give up anywhere from like 3 to 5%. So we usually have like 1 to 2 investors on our deals at any given time. And that is because, we want to make sure we are aligned with our investors. We have the same vision, the same goals. And to be honest with you, I don't want somebody calling me every day either, asking me every single number on a line item on the P&L, like I need to make sure that you trust me and you understand that, hey, we give you a P&L, you're more than welcome to review it. You have questions, that's fine, but don't blow me up every 2 weeks asking me how the business is doing. You trust us that we're doing our job. When you get that P&L at the end of the month, you're going to be happy, and that smile, you're going to have a smile on your face.
Yeah, I can see it right now. So when you going on a subscription business and you're like, hey, Josh, man, how come the churn rate went up? I saw the churn rate went
Right.
up like 2%. Well,
Exactly. Exactly. And
it's
look,
like, calm down.
I've been there in the very beginning. I used to take anybody who would give me money. Now, luckily, we've been successful and we don't have to do that anymore. Right? And so we know what we're doing. We've been around for a minute. We know what we're doing. We're very successful in the industries that we're in, and our investors are very happy. There's risk involved, just like in any investment. My main goal is for the investors that are in our deals, that we protect them and we make sure I treat them just as it goes.
Yeah, I love that. And right there, what you said, we know what we're doing. Research from the Harvard Business Review in 2018 highlights that there's a growing trend of entrepreneurs achieving financial independence by acquiring existing businesses, emphasizing the importance of due diligence and operational expertise. We're talking to somebody with that operational expertise. So I'm curious, Josh, if somebody were thinking to themselves, I'm ready for M&A, I'm ready for mergers and acquisitions, but I don't have enough cash to do it on my own. Maybe I'm sitting on 150, or maybe I'm looking to tap 200,000 out of my 401k, right? Diversify a little bit. It's good to have that nest egg, but let me take some of my 401k, which don't take my advice for this. Make sure you consult a tax professional, but I'm pretty sure if you take your 401k and put it into another investment, you could do so penalty free. Again, consult a tax professional on that, but I'm sure
Yep.
there's a way to do that. Um,
Yep.
what type of investment would it look like, and what kind of return could some of these investors experience? Obviously, I know you can't give hard numbers or whatnot, but I guess temper expectations for somebody who's on the fence right now thinking of diversifying themselves, whether it be with
Yeah,
you
I mean, I
or
can't
someone
I
else.
can't give out specific investor returns, but our companies make, um, you know, we make well over 20% returns, inside the companies, and so they do very well, and we're cash flow positive. We're in very specific spaces, and we keep buying companies in their same spaces, for a reason, because our goal is eventually, we want to exit down the road, to another, to like a PE or institutional money. So we keep buying in the same spaces for a reason, and hopefully one day, we'll have a large exit, for us and our investors.
Yeah, and that's the other side note too, kind of like speaking it more in the weeds here when it comes to the finances. You take that $200,000 out of your 401k, it's it's penalty free because you roll it over into another investment. Let's say a business with Josh, you get your 20% return, you get your cash flow from that money, and then 5, 10 years later, when you guys exit, not only do you get that $200,000 back, but with the equity increase, the increased capital that it's gained in the process. So it grew as if it were in your 401k, but you've gotten the cash flow from that. Am I breaking that down
Yeah,
correctly for
yeah, you're
people?
right. You're right. Yeah. So like the great thing is like, this beats real estate. So just to give you an idea, I can't give out specific returns, but it beats real estate. It crushes real estate, cash flow wise. And then on the backside, you have the equity play as well. So it doesn't compare.
Yeah. You've already touched on this, obviously, speaking with investors or whatnot. I know another big barrier of entry, the fear aspect of it is people don't want to buy a job, right? It's like, hey man, I'm busy already. Sure, I have some cash in my 401k, or I'm sitting on I'm getting to the point where my money's not insured in my checking account anymore. I got to put it somewhere, right? Like that's a problem people have is where do I put my money where it's insured?
Right.
but I'm too busy for another job, Josh. What would you say to people who are afraid to buy a business that's going to require them picking up the phone or going into a physical office?
Yeah, well, I think a lot, I think actually a lot of people, they're not made to be a business owner. And I talk to a lot of people every single day that they're like, "Hey man, can you help me buy a business?" Okay, tell me what you want to buy. Well, I don't know. I don't know what I want to buy. Okay, well, have you ever led an organization before? No, I've only had a W-2 job. Okay. Have you ever coached your kid's softball team or baseball team or anything? No, no,
Mm.
never done that. Okay. Do you know how to deal with conflict? Do you know how to have a vision? Do you know what I mean? Like, let's get into it for a second. And once I start laying all that out, they're like, man, I don't want to do that. That's like, that's not me. I just want to be able to invest my money. And what everybody is looking for is freedom. They all want freedom. So if you can't run it, or even like, there is no such thing as a passive business. So if you want a passive business, business acquisition, it's not for you. It's not possible. It's a fairy tale. Um, there's some gurus that preach that, but there's no such thing as a passive business unless you are an investor in a business and you let the operator like myself or my team do the work. Then it becomes completely passive. But you cannot be an owner operator and expect to be in a passive business. It's just impossible. At least not until you get to a certain level of businesses under your belt. And it's not passive, but you have a lot more freedom than you would is if you own just one business. So my recommendation is to find somebody like me or find another guy or a girl and invest alongside them. Learn what they do, learn how they operate,
Mhm.
and then from there, you can then maybe take the leap and go on your own. But you know, if you feel like you're a leader, if you feel like you have you know the the want to lead a team, to lead an organization, to grow it, you're ready to get nitty gritty, then I highly recommend to go out and buy a business. But
Yeah.
if you're not any of those and you're not looking to lead, you're not looking to do that, then just go invest alongside somebody, learn the ropes a little bit, and then decide
Mhm.
whether or not you want to jump in and do it yourself.
Yeah, and I mean, it's some of the greats have started as backups. Wasn't Aaron Rodgers a backup to Brett Favre before coming
Yep,
out and
yep.
slinging that thing?
That's a
So
great analogy. Yes, yep, yep.
so you might have the capacity to lead, but just because it's a new space, it might be more advantageous. And for anybody who's more risk adverse, it might be a smaller risk of investing with somebody else, learning the game a little bit, and then you can go out and
Yep.
quarterback on your own. Just don't backseat
Yeah.
quarterback, as Josh said. Don't call him about that churn rate.
No, no, man, I don't want to know about that. Trust me, we already know.
Yeah, yeah, exactly. Your team's already on it,
Hmm.
which is why you guys know what you're doing.
Yeah.
In terms of, and this could be a dumb question, but I still just want to, I guess, clarify the process with the financials, right? If I'm sitting on $150,000 looking to get into a deal with you, is this more of a down payment of a loan, a debt that I'm going to incur? I imagine 150,000 might not be enough to fully acquire the business or buy my portion of it, but perhaps that 150 is a down payment to a larger loan
Yeah,
that gets me a
typically if
percentage.
you typically if you're investing with us, if you come on as one of our minority investors, that's like anywhere 3 to 5% of our deal. You're buying equity, so you are a part owner of this company, and you don't have any you don't have any managerial operational stake, but you get to enjoy all the fruits of the cash flow, all the fruits of the principal reduction, the depreciation, and then also in addition to that, the equity play on the backside of like the possible roll up, and rolling a bunch of our companies up into into one fund, to a larger private investor, private equity fund, and that's a whole, we could do a whole another show just on roll ups, and
Yeah.
that's a game that we've been really focusing in on the past couple of years to try to make sure that we're positioning ourselves the right way so that we can sell out at some point down.
Yeah, just the last couple questions, and I want to speak to with that investor aspect, right? Minority investor, you can get in on this. Sure, it might not make you rich, but it's going to give you that cash flow. I guess speak to the promised land for some folks who are living, as we said right off the bat at the beginning, who they're living equity rich, cash poor. They're trading time for dollars, only to come home and barely have enough time with their family. What's the lifestyle like for someone who maybe has invested in a few deals? They've acquired maybe businesses on their own enough to get some good cash flow. Speak a little bit more on the lifestyle that some of these guys might be enticed by transitioning over to mergers and acquisitions.
Yeah, man, you need diversification. You need other income streams that are not requiring you to be present. Um, that is why I got into business acquisitions, is because I wanted to build an organization in multiple companies where I didn't have to be there, be present in order to be able to get a paycheck. So the advantage is, like, I still operate from a high level and I protect my investors' money and our investments. But on the flip side, I'm not having to do that. I'm not having to, run payroll. I'm not having to answer the phones. I'm not having to open the doors in the morning to make sure the shop's open. So, um, and that's why we set it up that way. The same thing goes for if you invest in a deal. You want to be able to, you want to be able to establish an additional income streams so that you can go on vacation and still get paid every quarter, and take a vacation, or your daughter or son's college fund, or retirement fund for yourself down the road. You need to be able to create multiple income streams. And I think that is crucial. Most people are just, they're living paycheck to paycheck. And, like they, if they don't go in, if they're not clocking the time clock, then they have nothing at the end of the week. You need to live under your means, take some of that income, go invest it, create new streams of income so that, one day, you could hopefully live off of all your different passive income streams.
I love it, man, and you hinted a little bit at the future in terms of an eventual exit. What's the long term play for you? Where do you see this M&A space going in the next few years? What does the horizon look like for you guys?
Yeah, man. Long-term play for us, it's, we probably will exit in the next 3 to 5 years. That's our goal. We want to acquire, we need to acquire about maybe two or three more companies to hit our target EBITDA, that we need to get in order to become attractive for a private equity firm to buy us out. So we're very close. We're not there yet, but we're very close. We have one more acquisition in the in the target, and so we're hopefully going to get that one done here in the next 90 days. And then we're going to try to shoot for one more before the end of the year. And then hopefully by Q1 of next year, we will have our third acquisition in play. And then at that point, it's time to go to market and see if we can play with the big boys.
I love it. I love it. Best of luck to you on that journey. And for anybody who wants to hop aboard and come along for the ride, perhaps as an investor, what are some of the best sources, resources, links, and areas for folks to find you, connect with you, and learn more?
Yeah, man. On Instagram at the real Josh Wilson, Facebook, real J Wilson. And yeah, you can hit me up on those two channels, or you can go to our website if you have a business that you want to present, jwenterprise.co. We will happily take a look at your business if you have a business for sale and you're thinking about selling it. Or if you have a business and you want us to partner with you on it, submit the form on our website, and we will get right back to you.
I love it, man. I'll have those links in the show notes or in the description below for anybody who's watching on YouTube. The last question is the heaviest one, and maybe it's with mergers and acquisitions. Maybe it's something extrapolated from your personal life or back in the day when you were hustling those kids with the cruise ship cards. But what is something you've seen, Josh, or something you've experienced in your life that shapes the way you view the world as a man?
Wow, that's incredible. I would have to say, having my kids, the day they were born, completely changed perspective for me, on making sure. I remember back then, man, when I had them, we were in survival mode, and it was a struggle, and it just taught me that, I could never give up because of them. So it has definitely changed the way I view the world, and how I'm here, and my purpose is here to raise them to be better individuals, and contribute to society just as I have. And but man, being able to be there for them for softball, for me for basketball games and sports, that was like the highlight of my life. I mean, my kids are a little bit older, so but that was the highlight of my life. Really, really enjoyed that. Glad I got to experience that. And they only come around one time in your life, and that was I'm glad that I was able to experience that with my kids.
Man, I love that, and the audience knows I have a 13-month-old right now, and just starting to see the activities that she's picking up on. We got a bike with a trailer now. We're going biking and everything. I just know the adventures are going to be going up and up and up from here. So I'm in the same mindset right now, setting up a life and looking to leverage myself so I could be my daughter's soccer coach or softball coach, or at the very least
Yes.
in the stands for all the games. I'm gonna be the dad out there with the whistle or whatever it is. I'm
Mhm.
all in it. So
Yeah, but you know
means
what
a
though?
lot.
You know what I'll say though is that if you don't set yourself up financially, it's very hard to be able to experience those moments and really truly enjoy them. The beginning part of my career, I spent a lot of times in the stands, but on the phone. And so
Mhm.
the second half of their lives, I call it the second half. I mean, meaning like their when they were
Childhood.
kids.
Yeah.
Yeah, their childhood. Yes, thank you. I spent that second half of their childhood not on the phone, being very present. And I'm glad I did, because I felt like it was needed for them just as much as it was needed for me. And I contribute all that to, because I got my financial ducks in a row. So
Yeah. Amen to that. Serial entrepreneur and business acquisition strategist who has built a multi-state portfolio of cash flowing companies by acquiring existing businesses and transforming them into scalable assets. Joshua Wilson joining us out of Louisiana. Thank you so much for being on the podcast today, man.
thank you, man. Appreciate it. Thanks for having.
Absolutely. It's been a great conversation. So much so I'm going to share a couple of the gems that you left along the way really quick. Just a quick recap, because I know a lot of folks are driving or maybe they're cleaning up while listening to the podcast. We appreciate it. Maybe even working out, which means you got one more set, and I'll get you home with this. Equity rich, cash poor. Are you living like that? Do you have a 401k and on paper you're worth six figures, but you could barely pay the bills at the end of the month? You're still trading time for money, which means you don't have enough cash flow, which is what actually pays the bills. You might think you're secure with your portfolio, but you still need to diversify. That means doing more than just the 401k, establishing different areas, whether it's the 401k, real estate, again, M&A, much of what we spoke about today. And it might sound risky, but your brain will talk you out of the risk because you've never done it. You need to take a chance. And sometimes when your back's against the wall, when you're in the corner, it's that Hail Mary, it's that haymaker you throw with your eyes closed that actually lands and can knock someone out. You could win $1 million, or you could lose $1 million and still be okay to tell the story. Josh is proof of that. And don't buy a falling knife. I'm going to deviate really quick. Josh, what is a falling knife? I forget to ask that. What is a falling knife?
Yeah, man, that's a company that that's literally falling in revenue, and eventually it's going to stab you, and you're going to die, and so is the company. So, well, you
Yeesh.
may not die, but the company's going to die, and
Yeah.
because you're going to get stabbed. And so that's what a falling knife is, when you have a declining, consistent decline in revenue over a course of a few quarters.
Amen to that. Yeah, don't buy the falling knife or else you're going to be left with the body. Cash flow starts on day one when it comes to acquiring the business. If you're looking for what to look for, niche down as much as you can. And this beats real estate. Josh said it in one set. This beats real estate. And there's no such thing as a passive business. But when you do your due diligence and you lean into the expertise, like Josh, his team, that is where you can be an investor and enjoy the benefits of being a business owner without the stresses of the operations day to day. Ladies and gentlemen, thank you for making it to the end. Josh, thank you so much for the time, the wisdom, and of course, everything you shared with us today. I know the folks are really going to enjoy it. If you guys did enjoy it, you already know what I'm going to ask. Hit that like button hit that subscribe button. And of course, make sure to share this with somebody else you know who can use this episode, who can get value from it. And maybe someone that you're looking at of like, hey, when are we going to get into business together, man? Send them this podcast to help them get over that hump and over the fear of the unknown. I'm also going to ask that you leave us a rating to let us know how we're doing. Catch us next week for another episode. And as we always say at the end, everybody wants the sunshine, but they don't want the rain. But you can't get the pleasure without first the pain. Let's grow.